Peter Eliades with you. Stock Market Cycles Update, Thursday, January 30th. There are times when the cycle picture and the projection picture are quite clear, straightforward. This is not one of those times, and so we're going to hopefully be relatively short today. There's a few things we're going to go over with you, but to show you the difference between the different indexes and averages, and that's why things are unclear here. You don't know which one's going to be right. We have told you that over the long haul, the New York Composite Index has tended to be the most accurate projection generator. For that reason, we're showing that to you first, and there's a very clear downside closing price projection. These are offsets of 12.1 and 13.8, kind of rounded off. This is not the offset provided by our projection software, which is exacting. These are approximations, but they're close approximations, and you can see that we closed below both of the lines and gave this projection between 13,614, rounded off, 13,700, rounded off. So that projection remains in effect. The little rally that we saw today did not change that. But we were down real close to the lows. In fact, in the New York Composite, we made lower lows for the day, intraday. So there have been things happening between the closes within the market hours intraday. So that's the New York Composite Index. We'll show you another one that shows a very similar picture. And this is the IWM, the Russell 2000, the ETF for the Russell 2000. Look at this. Very clear breaking, almost tried to get above here but couldn't do it, and the last 2 days have been well below both the lines. We have a confirmed projection for IWM to between 160.07 and 161.17. So were you to just look at those two indicators, you'd say, well, it's pretty clear there's a bearish outlook in terms of the cycles. But then we bring the question marks in. Here's one of the question marks. It's the S&P cash. And these are the projections for the S&P. Almost came down and gave the projection here. Nope. Came above both the lines 2 days ago. Yesterday above both the lines. Today moved below one of the lines, but by default it was moving up, but not as fast as the offset was moving up. So there's no clear picture here at all in terms of a down projection on the S&P. How about the Dow Jones Industrial Average? Here's the Dow Jones Industrial Average. Now, the projection software is telling us that it has generated a downside projection between 27,819 and 28,059 rounded off. And today it closed below both the offset lines. So you can say this projection is still in effect, but you can see how tentative it is. There's nothing definitive here in terms of being well below both of the offset lines. In fact, any kind of a little rally tomorrow at the close up into this area, 28,932 or so, that's only 60, 70 points up from here, 0.4%. That would invalidate all that, this downside projection right here. And then finally, if you want to really get confused in terms of what the market's telling us, we can look at the over-the-counter composite. And this one looks at the other one and says, what are you guys doing? We haven't even gone below those offset lines yet. So, as you can see, the market's in a iffy situation in terms of giving us strong projection information. And so we have no strong projection information to give you. We told you what the most reliable one was, the New York Composite, and that leans us to the bearish side in terms of those projections. So the only other things I'm going to show you is there are two charts that might give you a clue, something to take a look at tomorrow. This one we showed you the other day. This is this line that is the bottom of a channel. We'll go back quickly with this. This is on the 5-minute chart. This is a channel that's drawn between the high on December 20th at the opening and the high on, the all-time high, in fact, on January 17th. And you simply parallel that to the low on December 3rd, as you can see right down here. Okay? And that line was broken It was broken big time with the downside gap this week. Now we came up exactly to the line the other day. We showed this to you the other day, and that was 1 5-minute bar got up there from underside. That's theoretically bearish. And look what we're doing now. We're coming up again towards that area. So I've got some numbers to give you as guidelines tomorrow. At the opening, this line, this upper line, that we may come up once again and go to the underside of, will be at 29,025. By the end of the day, it will be at 29,069. If you want to keep track of it on a mini basis, on a micro basis, it moves 0.564 Dow points per 5-minute bar. Take out your calculator and follow it. That's, of course, only if we get up towards the line would you do that. Right now, we're not towards that line. And if you want to do it only by the hour, then you add 6.77 points per hour. So at the opening of the day tomorrow, we'll be at 29,025. At the end of the first hour, you can add 6.77 points on the Dow to that, and you'll know where we are throughout the day. One more chart with a guideline we haven't shown you yet. There's a pretty good line here. In fact, this channel, if you look at it alone, it's an 81-minute chart on the S&P Futures daytime only chart. And look how drawn, again, a channel from these external highs. This one happens to be on November 4th at the opening. This is the all-time high right here, January 22nd. You parallel it again to the in this case, the October 3rd low, and you can see we came right down to it. There was a slight piercing of it today, but certainly nothing significant. Now, the line we want to call to your attention is this red line. This is what I call a Garrett Jones line. Garrett Jones, an associate of mine in one of our financial businesses, darn good technician, and he draws weird trend lines and channels. A lot of times they prove to be correct. I don't always agree with the way he draws them. And this is I drew this channel and showed it to him, and I told him that this was a Garrett Jones trend line. Let's take a look at it close up. Okay, so you can see, why would you draw a trend line when you have a line that goes below it, very obviously going below it? This little spike down. Well, the reason is, look how many times that line got hit. 1, 2, 3 at the beginning, 4 here, almost 5, almost 6. On Friday, last Friday, came down exactly to it. It's almost like the other channel we showed you, rallied up from it, broke it strongly on Monday, and rallied up to it once yesterday, and once again yesterday towards the close. Broke down big beneath it today, and now we're rallying back up towards it again. Tomorrow, this line at the opening is going to be at around, this is again on the futures, around, let's call it 32.9850. That's 1, 2, 3, 4, 5. By the end of the day, it'll be at 33.02 approximately. So those are areas to watch. If we get above either one of these lines, you're going to have to give the benefit of the doubt, I think, to the upside, at least short term. So that's it. That's all we have for you. There are a lot of contradictions in the market right now. Thanks for watching. Haven't subscribed? Bottom right, click the banner, click the bell. You'll be notified of any special updates. Thanks a lot for watching.